Hi friends, this episode we'll see about the risk versus reward. So this is Warren Buffett. He is the greatest investor of all time. He made his money by investing in a good companies. So he will identify good companies and invest. So he has rules to follow. He says the number one rule is never lose money. Rule number two, don't forget rule number one. So that is his mantra for success. So any investments you take, you should never lose money. That is risk versus reward. So we need to see the risk and the rewards when you are investing in any instruments. So people invest in stocks, mutual funds, cryptos, then futures and options. So you need to know about the risk versus rewards. So this is the sample. So if you are losing some percentage, how much it will take for you to restore the losses. So you can see this column actually. Suppose you invested $1,000. Here 5% loss is it will go to $950 actually. Then you need to have 5.3% returns to get back to this amount back, 1,000 rupees. So again, if it's went to 10% loss, 900 rupees, you need to have gain 11.1% to gain to 1,000 rupees again. So you can use this as a reference and you can check it how much it will gain for you need to gain to restore the losses. See, people invest in cryptos, they lost 30%, 50% of that. Suppose you lost 50%, so you need to get 100% profit to get back to the normal actually. Get back the principal. No, not even a gain actually. You need to get 100% return to get back to your principal actually. So if you lost 70 or 75% in a stock, you need to have a 300% return to get back to your principal. So when you are having a consolidated portfolio, so you should always aim to contain the losses rather than maximizing the returns. So when the market is fallen, so that is the right time to invest more in the market because your risk reward is more favorable that time actually. When the market is high, it's at a peak valuation, the reward is not good for you to get the reward. So risk is more. So we need to do the asset allocation that time. Then you can see the graph. So this is the percentage loss. Then how much gain needed to recover from losses. So this is a graphical representation of a previous chart actually. So if you lost by 5%, you need to have 5.1, then 10% loss, 11%. Suppose you lost 25%, you need to get back to principal, 33% is needed. Suppose you lost by 50, you need 100. 65%, 186% returns, you need to go back to the normal. Then you need to check the time, how much time it will require to get back to that principal. Because suppose you are lost 50% in a stock. Okay, so it has a time to recover to get back to your principal. So you never know how long it will take for you to come to get the principal itself rather than the gain. So the time period also more important. Suppose in the stock market you invested, you lost almost 20%. Okay, so then you need 25% to recover to your principal. But the time involved during it, you can, if you taken the time of 2 years, means it has time is lost. In that 25%, if you are gaining back to a principal, then 2 years is lost actually in that. So you need to check the risk versus reward before any investments you make. People forget this one goes by the bull market or bear market. Bear market is the right time to invest your money in stocks. So I can give you the good example now. The most of these mid caps and small cap companies are falling actually. Then it's a good time to invest in this stocks or invest in this some of the mutual funds whichever last much in the mid caps and the small caps. When the economy recovers, you will going to make more money in the mid and small caps, but you need to allocate how much percentage to mid and small caps. That is also needed. So people now going to the fixed deposit now, but rather than now the challenging environment, you should allocate some portion of money into equities. In the equities which small caps and mid cap companies are falling due to rising interest rate. These kind of opportunities you should make use of that, because when your risk reward is favorable, you need to take that risk and capitalize on these opportunities. Thanks for watching.